Today is February 9, 2026, and a major update has just dropped in the Economic Times that every Indian household needs to hear. For generations, we have viewed gold as our ultimate safety net, the one asset that stays within the family, passed down from grandmothers to daughters. But are the rules of the game changing? With the new draft rule 2026 and the controversial rule 57, the government is looking closer at your lockers than ever before. Is your family gold actually safe, or are you sitting on the tax ticking time bomb without even knowing it? In this video, we are going to decode exactly what the law says, what the limits are, and how you can protect your assets. Let's dive into the context. So, what's exactly is happening? On Saturday, February 7, 2025, the Income Tax Department released a massive document, the Draft Income Tax Rule 2026. This isn't just a minor tweak, it is a complete overhaul aimed to replace the old 1962 rules. Right in the middle of this document is Rule 57, which focuses on the determination of fair market value for your assets, specifically jewelry. According to the reports from the Economic Times, these rules are proposed to take effect after April 1st, 2026. The goal is clear. The government wants to simplify how it values your property and jewelry. But as we all see in the next few minutes, simply does not always mean cheap for the taxpayer. If you can't prove what you paid for your gold, the taxman now has a very specific formula to decide what it's worth today. Now here is where it gets technical, but very important. Rule 57 outlines exactly how the government will decide the value of your jewelry for tax purposes. If you brought your jewelry from a registered dealer and you still have the paper invoices, congratulations. The fair market value is simply what you paid. But let's be honest, many of us have gold that was gifted at a wedding 20 years ago or inherited from a grandmother. In those cases where there is no invoice, the rules get strict. The tax department will look at the open market price, the price your jewelry would fetch if sold on that exact day of valuation. And here is the kicker: if the value exceeds 50,000 rupees and you don't have a bill, you may be required to get a report from a registered valuer. This means your family heirlooms are no longer just memories, they are financial assets that the government now have a specific yardstick to measure. This brings us to the most asked question: exactly how many grams of gold can you keep at home without getting into trouble? According to the CBDT guidelines, which have been further clarified in the 2026 tax discussions, there are specific safe limits where tax officials are instructed not to seize jewelry even if you don't have an immediate purchase bill. For every married woman in the house, that limit is a generous 500 grams. For unmarried women, it is 250 grams. And for the men is in the family, where whether married or not, the limit is 100 grams. Now it's a common myth that you can't own more than this. You absolutely can. You can own 10 kilos of gold if you want, but for anything above these limits, you must be able to explain the source, whether it's from your declared income, a legal inheritance, or a documented gift. Without that proof, anything above these gram marks is at risk of being flagged as explained wealth under the section 69A. One of the biggest misconceptions in India is that inherited gold is completely outside the tax net. Let's clear the air. If your parents or grandparents gift you jewelry or you received it through a will, there is zero income tax at the time you receive it. You don't need to pay a single rupee for the day it enters your locker. However, and this is a big however, the tax kicks in the moment you decide to sell that gold, even if you didn't pay for it. The government sees the profit from the sale as a capital gain. Under the new rules for 2026, if you had held that gold, including the time your parents held it, for more than 24 months, you will be taxed at a flat 12.5% on the gains. And if you can't prove the original purchase price from 20 or 30 years ago, the tax office uses the April 1st 2001 fair market value as the base. This is why knowing the history of your family gold is just as important as owning it. You might be wondering, why is the Indian government becoming so strict about tracking assets like gold and jewelry right now? The answer lies in a global trend of transparency that is sweeping across the world, starting with the European Union. In 2026, the European Union is enforcing landmark laws like the AI Act and the Digital Services Act, which mandate that every pieces of digital content and financial transaction be traceable. By August 2026, the European Union will even require mandatory labeling for AI generated content to prevent fraud. But it doesn't stop at digital. The European Union is also opening massive ownership databases by mid 2026 to track who owns it what. India is following this global blueprint, whether it's your jewelry in a locker or your digital investment. The world is moving toward a future where accounted wealth has no place to hide. Rule 57 in India is simply our version of this global shift toward a more transparent digital economy. Before you close this video, here is your 4-step checklist to ensure your stay in the right side of the law in 2026. First, do a simple home audit. Weigh your family's gold and compare it against the 500 gram, 250 gram, and 100 gram limits were discussed. If you are under the limit, you have a strong layer of protection. Second, start a paper trail. If you don't have invoices, look for wills, family settlement deeds, or even old family photographs where the jewelry is visible. These can help prove inheritance in a dispute. Third, for any high value items worth more than 50,000 rupees without a bill, consider getting a report from a IBBI registered valuer. Having this before you get a notice is massive advantage. Finally, digital everything. The new tax system is AI driven, so having your documents ready to upload can save you months of legal headache. Remember, information is your best tax saving tool. If you found this context helpful, hit the like button and share this with your family WhatsApp groups. It might save someone from a massive tax mistake. Subscribe the viral text context for your daily dose of the news that matters. I will see you the next one.